Today I have Nick Maccarrone with Oxford Mortgage, and many veterans don't know about it. You can purchase either a duplex, triplex, or a quadplex by utilizing your VA loan. So take it away, Nick.
Yeah, I mean, this is a great, Rick, thank you for having me, by the way. I really appreciate it, as always. Yeah, this is kind of a fun little hack to help not only VA buyers get into their primary residence, but also help them to get into the world of investing, right? I mean, we all know that, well, I guess we all don't know, you and I know, that if you go buy an investment property, you're going to need 20-25% down, right?
Right.
So there's kind of a cool way to utilize your VA and buy a multi-unit place, so you can not only get your home, but also get up to 3 other investment properties all in one fell swoop.
Right, exactly.
Yeah.
Like in the case of a quadplex, right? That's exactly what I'm leaning towards. I mean, live in one and then have your, well, tenants basically pay your mortgage payment.
That's right. That's exactly right.
Yeah,
Yep,
yeah.
that's
So
right.
you're living at a net zero debt in that regard.
I mean, exactly. I mean, it's like I said, I mean, to be able to get into a investment property with, in theory, 0 down payment. So to be able to get into 3 investment properties with 0 down payment is just a really cool opportunity.
I'm sure many people are wondering, how different is this than purchasing any other property through by use of the VA loan? I mean, is it the same process?
It's the exact same process. So, you know, obviously, if you are buying let's just make up numbers here. If you're buying $1 million quadplex, you got to be able to qualify for that, right? Because you're not going to have the rental income to help you offset that yet, as far as qualifying is concerned, right? So you'll need to be able to carry that as far as VA underwriting looks at it. But outside of that, it's exactly the same.
I see. Now, typically, what is the income requirement? I mean, what's the debt to income ratio on that? As you did point out, Nick, you had mentioned that as long as you can carry that mortgage, that's the main thing. So
yeah, listen, we want to keep, you know, everybody's comfort level is going to be different, of course, right? But for qualifying, we're really trying to keep, you know, between 47-50% debt to income ratio, right in that range. Okay, so you know, if it's going to cost you $5,000 a month, you need to be right around 10,000 plus in income, assuming you don't have any other debt. So just like any other loan, your debt to income ratio is, you've got your income, it's the new house payment with taxes, insurance, HOA, all the things, and then any other credit type items you have, cars, credit cards, student loans, things like that. Okay, so we want to try to keep that debt to income ratio somewhere between 47 and 50. For qualifying. Now you can go higher in many cases, and actually in most cases, but that's kind of what we're looking for.
how does a person go about qualifying if they want to use the rental income from the other units in order to qualify? How does that go?
Yeah, so to be able to do that, you have to have landlord experience. Okay, so if you're a veteran who's utilizing your VA and you have not had landlord experience, you can't use the rental income to help you qualify. The presumed rental income, right? But let's pretend for a second that you do. Let's say that you have investment property in somewhere and it's on your tax returns. When you do this, what will happen is when the appraisal is done, the appraiser will say, hey, you're buying unit A, unit B will get approximately $1,500 in rent. Same with C and D. Then VA will give you credit for 75% of that on each unit. So 75% of 1,500, 75%, so on and so forth, as income to help you qualify, right? But again, you have to have rental experience to be able to do that. If you don't, you just have to qualify for the whole purchase without any rental income to offset.
Now, one important question in regards to landlord experience.
Yeah.
If a person has existing roommates that they've had for like, 5 years or so,
Yeah.
would that qualify as landlord experience or not?
They're going to have to be able to document it on tax returns. So if they didn't claim that as rental income, which to be fair, most people don't in that situation, but if they do, then yes, they would be able to do that because they've got landlord experience.
Now, typically, what are the credit score requirements in this scenario? Is it again, is it different than any other VA
Good
purchase?
question. No, it's not different. Okay. VA is kind of funny. So VA doesn't really have a credit score requirement, but the lenders typically do. Okay. So, 580 minimum. Normally, I would say what we're seeing for people that are doing something like this is somewhere between 660, 700 would be ideal. Because again, the other thing in the ratios for people that have non-landlord experience or no landlord experience, the ratios have to line up to be able to carry the whole thing. So if they don't have really good credit, there's a chance that there's some things on their credit that potentially could cause some debt to income ratio problems. Not always the case, but yeah. But same if they're just buying a regular single family home.
Gotcha. Now, in that process, I know that purchasing a single family home on VA, you cannot use it to buy something that requires fix up. And would it be safe to assume that that is the case in this scenario too?
Yeah. So listen, there is a VA rehab loan. Most lenders don't do that yet. Okay. So, so you and I are familiar with like the FHA 203K loan that allows you to build improvements into the loan. VA does have that option, but it's really not a thing yet. Okay. So they really just need to be prepared for, hey, do 100% financing. Let's potentially, if it works for the seller, let's get a seller concession to help pay some of your closing costs, or take a rate that will help you pay your closing costs. And then you've got whatever money you potentially could have used for down payment to do some things to the house.
This is only limited to places that have no more than 4 units. Otherwise, that will be commercial, correct?
Yes, we're talking up to 4 units.
What are the loan limits? I know that they vary by county, like Douglas County and whatnot, and so on and so forth. So what are we generally looking at?
Yeah, so like Douglas County is a good example, right? So Douglas County 1 unit is 816.5. 2 units is $1,045,000 and some change. Is one, gosh, I don't remember exactly, 1,263,500, I think. And then 4 unit is just over 1.5 million.
All based on what you can qualify for.
Exactly, because like I said, in this situation, in most cases, not always, there are veterans who have landlord experience, but in many cases, people that are utilizing this to buy a primary residence and then 1, 2, or 3 investment properties, they don't have rental experience, so they won't have that to offset. So, to qualify for 1.5 million with no rental income to offset, you're gonna have to have substantial income to do that, right?
Exactly.
Yep.
Now, I presume that being that this is kind of like identical to a single family purchase, if somebody has an existing, quad, tri, or duplex, and they want to refi into a VA loan to do that and to, occupy one of the units, they can do that, right?
They can. Yeah. I mean, listen, VA is only for primary residence, right? So, I mean, it works on the 2, 3, and 4-plex, but if you've got, if you own a duplex both sides and you're in a conventional loan and you want to refinance and do a VA with the investment attachment, you certainly can.
Okay. All right. Okay. Now, can a VA loan be used to purchase a multi-unit property that has commercial space?
There needs to be 2 veterans buying together. That's the unique piece to this. So if you've got a husband and wife that are both veterans, then the potential of buying something that does have commercial space is there.
How does one handle the property management and maintenance on a multi-unit property like this?
Yeah, so it'll be just like if you bought an individual townhouse, right? If there's an HOA, you're going to be responsible for all the HOA payments, maintenance. Depending on what that HOA covers, maintenance is going to be your responsibility as well, just like buying any other house, any other investment property. Now, if there's certain things that are covered by the HOA, obviously they'll reach out to the HOA on things that are covered by said HOA. Yeah, they would just be responsible for it. Now, like I said, if there is an HOA, they handle most of the things. You will need renter's insurance
Each
policy
unit.
for each unit on the interior for kind of the walls in, and the HOA in theory would cover walls out. So if something happens on the walls in, you would also have an insurance policy for that.
So even if the property has solar panels on it, it's just the same as,
Yeah, that's
single
right.
family purchase, right?
That's right. Yeah. I mean, it's, you'll have to have the solar panels transferred from the seller's name into your name, into the buyer's name, right? If there's a lease, same thing, that lease will have to be transferred over to the new buyer. But solar panels is totally fine. Absolutely.
Would you be able to utilize this, the VA loan, obviously, if it's one of these multifamily units that has existing tenants in it? How does that differ from the income qualification?
So you could certainly use, you could certainly buy something that has a tenant in it. Okay, that's no problem. You won't be able to use the rental income to help you qualify, even though the tenant is already there.
Good to know.
There are some cases where oftentimes you might be able to get that approved and get some of it. See, the problem though, Rick, is that without tax returns, they don't have a net rental income amount to calculate. So you might get $1,500 in rent, but what's written off?
Gotcha.
Right. So that's why.
In all, basically, the process is very identical to purchasing a single family unit, basically.
Yeah.
A single family home, and even the closing process, inspection, appraisal, everything is just 100% identical.
Yeah, just in theory, the price is going to be a little bit higher, right?
Okay.
Now we do, listen, on 4 units, you don't see a ton of this done, Rick, on more than 3 units usually, just because that the pricing gets so extreme for what maybe a veteran first-time home buyer is trying to qualify for, right? Because a lot of times that's where this happens is you have a veteran buying a $200,000 unit to live in, and they're able to get these other ones, right? They may not qualify for 800,000.
Right, exactly.
But they might qualify for 400,000, right? Or 600,000. So you don't see it a ton on the 4 unit ones because that gets really expensive, especially like I said, because in many cases, the veterans that are utilizing this are also utilizing their VA for the first time. Because that's a perfect house potentially for a unit for a young single guy or a young married couple, right? It may not be as great of a place for a family with 3 kids.
Right. Indeed.
Right. Yep.
Indeed. So basically, overall, it's a great stepping stone, and there are some caveats, and everything basically all depends on the lender that you use. So
yeah, I think like anything, right? Like VA guidelines are VA guidelines.
Right. Exactly.
I want to be fair on that, right? I don't make the guidelines. One thing that is important though is you want to have a lender who knows what they're talking about. And you, just like any time with any business, service is important. You and I have worked together for a long time, and I've done home loans for you before, and you know that I'm always going to be in their corner from the beginning to the end and beyond, right? Just like you are, right? So it's important, and I think someone who does VA loans like we do, that's important, because even if lenders are allowed to do VA loans, it doesn't mean they do VA loans.
Right.
They can. They probably shouldn't. Right. But we do a lot of it. to be
Well,
able.
awesome. Well, Nick, that's all I've got. Thank you again for your
Yeah,
time and for
absolutely.
going over this. This is really valuable information. And if you'd like more information, you could reach out to Nick. His information is going to be in this description of the video. My information will also be in the description in this video. That's all. Thank you again.
Eric, see you later.